All right, hi, and welcome everyone. Thank you for attending this week's session.
Hello.
Hello. Okay. Obviously, we have a lot to cover. Shawn is indisposed currently, but he will be joining us in a little bit. So just me right now. All right, so first off, we'll go through our feedback. So I took out a few things. Russ, I took out that one with the, adding the sector to the earnings because there wasn't enough space. Sudhir, there was one that you put in for creating alerts when things hit targets. You can do that all manually through back testing. If you have questions, just let me know on that. This one right here, they're still working on that where, those manually created trade alerts are closing out one day after. So they're still working on that one.
So back up, Josh. If you like, what my suggestion was that if you wanted to watch a stock, and it's not in, back testing shows it's not favorable right now to trade it.
Okay.
You want to be alerted if it hits a target or changes its state. Where can you do that now?
Well, it depends. So if you want to do, let's just say you want to track Google, right? And you want to know you can do it obviously manually. In the state targets page now, you can pull all those up. If you have an individual stock list, or you can create back tests. So you can say, let me just show you. So like in the signals, you could create back tests for state targets. So you could do, current state met today, and you do, whichever one you wanted. Like, you could do one for target one for target two, one for three, and you could do it for, and you just do like a quick, do a back test for it, and you can create alerts for them. So if you wanted to do, all 6 of these, for Google, or, you had 10 stocks, you could do it for Met today, any state. So anytime it goes into like a new state and hits a target or stop loss, it would alert you through those daily alerts. So you just do
so
that.
You can upload a stock list to this, and it would.
Yeah.
I'll have to try it. I don't quite well. I've never tried it, but okay.
Yeah, it's in the same manner that we did like state 2, target 3 met today. But instead of that, if you want all states, you just hit current. So so whatever it's currently in, it'll alert you to, which, if you wanted all 6, or if you just wanted like, the 3 targets and, the first stop loss, you'd have to create 4 individual tests and then, do alerts for those.
Okay, I'll have to try it. I'm not. I've never set that up. So okay.
Okay. Yeah, if you have problems, just let me or Shawn know.
Yeah, I have a comment about Sudhir's comment there.
Yeah.
He's kind of asking for an alert to re-alert, if you will, once a strategy might come back into focus automatically. And I'm not sure that's a great idea, because if the strategy failed for some reason, it might be because the assumptions about your initial conditions and expectations have changed. And if that happens, the strategy is probably not worth going back to. So it might be better to always manually reassess those conditions before getting back into a strategy that you were thinking about a week ago. My comment on that. You don't want to get stuck with the system alerting you to something that might be out of out of reason now because assumptions may have changed, and the system doesn't know that what your assumptions were, but you do. Just
No, that wasn't really quite the idea. You know, for example, let's say you're looking at Google, as Josh was saying, and you know, you just want to buy Google, just a simple trade, but the long stock in its current state, I don't know what state Google's in, but let's assume it's in, I don't know,
Pull it up.
everything's into one. So it says buying a long stock, the win rate is 50%. Okay, so you don't necessarily want to get into Google. You want to wait for a pullback, right? You don't want an in-state one. So what you want is an alert when it hits state 2, right? Not going back to the current state. So then you say, oh, it hit state 2, it's in a pullback. You follow what I'm saying?
Mhm.
And then it might make sense to go long Google because that's the definition of state 2. So I haven't tried the signal thing. It might do what I'm asking,
Yeah.
but without checking every single day, you don't know
Right.
whether Google hits state 2 or not, right?
Right. Yeah.
So
Yeah.
that's what I was asking, is for certain stocks that I want to watch, I want to set up an alert when they change states, or maybe hit a particular target, or hit target 3 or some stop loss 3.
Yeah.
But I haven't tried the signal thing, so I'll try that first. And if it doesn't work, then I'll come back with the suggestion.
Okay. Yeah, I mean, other than that, you can do state transitions, but it's something you have to do every day, like you said. So, the targets and state transitions boards, you can do it in there every day. But yeah, if you're just looking for like an alert, oh, here, check the system, you'd have to create that manually through the back test.
Okay.
Okay. All right, let's go back. So the balance lag, that's another thing the programmers are working on. It's not enabled for the single page back testing. So they're working on that also. This one, Sudhir, you're still on here. What exactly are you looking for?
So go to the transitions, or the state target page.
Mm-hmm.
Okay. Okay. So if I'm looking at a stock and it hit target 3 today, it says current target 3, right?
Mm-hmm.
Okay, I can go and the stock shows up here, and then I can try, all right, will a long stock work in this condition? Will a bull put spread and all that kind of stuff, right?
Right, right.
What I'm suggesting is that a similar page be set up for the studies. You have, you just did the seminar. You have 9 studies, right?
11.
11, okay. Unique to Delphian, right? Whether it's the 10% pullback or the Keltner channel bottom or whatever. So if you would go click on current state target 3.
Yeah, that's what it's at. This.
We'll click on that and see that what I'm imagining is a table comes up with your 11 studies.
Okay.
Right? And so I could pick, okay, what met 10% pullback, for example, all right? And the studies may have recommended a bull put spread with a 60-day BTE and all that kind of stuff.
Right.
I may wish to try a bull put spread with a 30-day, or not quite exactly like you recommended. And I just want to see what the result is. You follow what I'm saying?
Yeah, I know.
And so it would be a page just like this, but it would be called, the Delphian Studies page, where I could use one of the, now go back to the different strategies, if you would, please. I could instead of long stock, I could switch it around to my own parameters
Yeah, and you can bulk test it.
and bulk test it. So you're able to select the study and then modify it to what you want. Because a lot of times, for example, on the bull puts,
Mhm.
I don't want to go 60 days out for
Right.
my own, I just want to go 30 days out, right?
Right.
And so I can just adjust these small parameters easily and see what the effect is, other than, what the study is recommending.
Okay. Okay.
And the other part of that is if you would go to the stock overview, and just put in any symbol, yeah, in the state modeling.
Mhm.
So obviously Apple didn't hit a study that I can see, but let's assume that it had dropped below target stop loss 3 and bounced up.
Mhm.
And it probably met, I don't know, one of the Keltner channel bottoms or one study, right? What I'm imagining is that there would be a label like an S, right? That showed on that day it met a Delphian study.
Oh, yeah.
And then just put your cursor over any of the candles
Mhm.
and see how it blows up and it tells you the open, high, low, close, and the date.
Mhm.
So the S, if you had an S label there, it would blow up and show you, oh, this met the 5-year SPX correlation study.
Yeah.
You follow what I'm saying?
Yeah.
But it would, when it's not blown up, it would just be an S label.
Yeah, I don't know if we could do it on here, but I'm pretty sure we could do it in like the charts where we, could have like a signal for, study, where it's like,
Right.
yeah,
Because you already have in the chart, you don't show it on your page, but you have the labels for the states,
yeah,
right?
and
It hit
in
state
the
1,
chart,
state 2. So I just want to label that it hit a study.
right. Okay.
And I think that would be helpful because let's say you just happen to not see a study for a few days, you can go back, you can say, oh, it met the Keltner channel bottom on that day.
Mhm.
Because, obviously the Keltner channel or the Bollinger Band aren't showing on the chart,
Right.
right? So you don't know that it met that. And if you see an S, you can say, oh, it met that study. And then if there was a page like the state target page, you could
Mhm.
go to that page, use the time machine to go back to that day,
Right.
and you can put in, a trade idea that you want.
Okay.
You follow what I'm saying?
Yeah, I do. Yeah. Okay.
Yeah, but there's lots of studies, and if you have, I mean, then you have to have a lookup table for like your annotations to the chart to see which study was met or whatever. It
Well,
seems
that's
like
what I'm saying. It would blow up, just like when he scrolls across a candle, it blows up and gives you the high, low, and everything. If you had an S there, it would blow up and tell you which study.
Yeah.
And there's 11 studies, right? So
Right.
it would just say it met this study on that day.
Yeah, we could probably put that in the indicators where it's, has all studies or, the 11 listed here if you want to look at them individually.
Right,
I think
right.
we could do that. And like when you hover over it, if this was a study, it would say, down below, like, 5-year correlation or something.
Right. If you just had an S there when it wasn't blown up, when you weren't
Yeah.
hovering on it, it wouldn't take up that much room, right?
Right, right.
It would
Yeah.
just, and if when you hovered on it, it would give you more detail if you wanted it, right?
Right. Yeah. Like, there's day one. So here in the text, it would say like, breakout or something,
Right. Exactly.
Okay.
Because those are things that are unique to Delphian, right?
Mhm.
I can't get that study in like
Yeah.
Think or Swim or something, right?
Right,
So
right.
it's unique to your company, so you might as well put it on your chart.
Yeah, that's a good idea. Okay. Okay, well, I'll take both of those, and we had discussed the studies page, but we wanted to get your input on exactly what. So I'll take that to the programmers, see what they can do. I don't think there'll be a problem with either.
Mm-hmm.
So, okay, sounds good. Okay, so that's the feedback. Please, keep adding. We definitely appreciate all the input, and you guys are helping make the platform better and easier to use. So that's that's the goal, to make it more useful.
Yeah, I will say, by the way, Josh, the addition, the three big additions or four really, you guys have done recently: the earnings plan, adding the bulk analysis, the state target page, which is like the state transition page. Fantastic additions, really helping, more situations where you can analyze it. So kudos to the programmers. Those are really very helpful changes.
Okay. Well, thank you. I will pass it along. They work hard all day. We have a few more things today. I'll show you. Hopefully you guys think they're definitely useful. So we'll get into those in a little bit. Okay. So in the share drive that we have, I put in all the PowerPoints for our webinar last week, so you can see them in there. They're labeled by the topics. Over RSI bottom. There's a lot in here, so I'm gonna. Are you guys done with the? I guess the earnings webinars. Can I pull those out? Because it's kind of, there's just so much in here.
I personally downloaded all the earnings stuff.
Yeah. Okay.
And I have it on my hard drive. So it's, well, I don't know about everybody else, but
Okay.
for me, I downloaded it.
Okay, well, if you want it, just go in there today. I'll be taking those out, tomorrow, I guess. And, honestly, we have our next webinar will be earnings for Q4 next month. So probably, probably in this range here, 16th or 23rd. We'll go through the next earnings, Q4.
That's 2 days before Christmas, right? The 23rd.
Bah humbug. Yeah, probably the 16th then. Sorry, I guess I'm screwed. I don't even think about that stuff. Yeah, probably the 16th then. Or yeah, we're not going to do it the day before New Year's. Yeah, so we'll try and shoot for the 16th, like a month out. I have to get through all that testing. So, along those lines, are there things as far as the earnings plan or just in general about those strategies that you guys think we could do improvements on? Does anyone have anything right now?
I had mentioned on the non-movers and the vol crush.
Mm-hmm.
The vol crush was done with a earnings fly trade.
Yeah.
The non-movers was done with a short strangle.
Yeah, yeah.
The short strangle or straddle doesn't make sense to me.
Mm-hmm.
I had mentioned this in previous calls because one, it takes a lot of buying power, and you couldn't do it in an IRA anyway, right? For those who are trading in IRAs. And I have seen that the non-movers and the vol crush almost 90% of the time occur at the same time. there's been a couple of non-movers, and I've traded nearly the whole plan. There's been a couple of non-movers that didn't appear with the fall crush, which then I just went and manually analyzed earnings fly and did a fly.
Right. Right.
So I never did the short strangle or short straddle because it just takes too much buying power.
Right.
So that there might be some adjustment there that would make sense.
Yeah, I'd already told Shawn this to do the iron butterflies for both.
Right.
Yeah, and I think the other thing along that, we'll see if, because he only ran like one test, I think you can do it for multiple days.
Mm-hmm.
And then we can do one for the next week expiration too. So we'll have multiple tests for that one next time where, it's looking at this week's expiration and the next week's. We're going to lower the profit target. He says 40, but it's, I've done a bunch of those, and unless you're doing week of and you get it just right, you're not going to get 40. So I think, lowering those expectations for people, and see what the tests say too. So, so we'll have more testing on that instead of just one day. We'll, have multiple days and, 2 expirations.
Yeah. And then one other thing I did find, I think I pointed it out on this call is, occasionally I would run into about 3-4 times, one that qualified for bullish runner and bearish runner.
Yeah.
Which just didn't make any sense. So there might be some, I don't know, something in the coding there that it couldn't qualify for the both on the same day, right?
Unless it's a super volatile and it dropped 10%, and then the next day it went up 15. Obviously, I just took that. That was straight data input. So I guess we'll. I think we'll have to go through and sanity check it, manually. It's like, okay, when we pull up the plans, like, okay, we got a bullish and bearish pre-runner, they're 1 day apart. So I think that's just, we'll have to go through and manually verify those. It was a few symbols and they're kind of kooky ones like YY or whatever that is,
Right.
So we revised the list, so it'll be a lot different as far as the symbols out there, because we opened it up. So I think that'll be a manual check that we'll just have to do and have to make a decision like, okay, just, pull them both or, go in and look at the charts maybe.
Yeah. Other than that, I thought the earnings plan was great. I've done very well with it. I've traded tons of them, but and I'm at about a 78% win rate. So
that's good. I think overall, I think that's pretty strong. It's given the current circumstances of the market environment. I think that's a pretty strong quarter so far. So
I agree completely.
Okay. Does anyone else have feedback on the webinar? How we can improve those, anything like that?
Josh, I don't have any feedback, but how many of those files are you going to take off Google Drive?
Oh, I was just going to take off the earnings, PowerPoints.
Oh, okay.
Yeah. So like the bearish runner, pre-runner, I just put all the studies ones in there, so I'll leave them in there for a while. But these will be back, at our next webinar when we update them for that earnings webinar. So they'll be gone like a month, and I'll replace all these Q3s with the Q4s.
Oh, okay. So they're not gone forever then.
No, they'll just be updated.
Okay.
In a month.
Yeah.
All that testing we got to do. So, yeah. So Yeah, if you want to, if you want any of that earnings stuff, just, save it. Obviously I'll still have it. I have records of everything. So if you ever need it, I can, email it to you. But yeah, just, it's pretty clogged right now, so try and make things easy for you guys. Okay.
Oh, thank you.
Yep. Anyone else?
Yeah, I have a question or some actually feedback on the webinar too.
Okay.
I noticed that you had a lot more people into it, right? So I think it was marketing as well as information to this group that happened to be on that Wednesday.
Yeah.
So, well, I guess my feedback is I remember asking I don't know, a leading question, I think, because I thought it might be interesting or important for like people that are not necessarily customers yet. Might be kind of important to them. And I think your feedback was, well, we'll talk about it in the weekly meeting. And I go, okay. I guess any kind of guidelines you can give us, let's say the regulars, on types of feedback that maybe we should just hold off of and just wait for this meeting versus trying to butt in or commenting during a monthly kind of marketing and information meeting.
Yeah, I know what you're saying. The webinar format's a little different because of here it's a lot more give and take. You guys talk. Those we kind of like. We do a lot of prep for them, and they're pretty much like packed to the gill as far as that 3 hour. So we don't have like much time to kind of go down rabbit holes as far as, or, cover much else besides, the current topics that we laid out. So, we definitely always appreciate the feedback. It's just, we're very time constrained on those. So, we can't really, go into all different types of things, and we'll and not be able to cover, everything that we laid out. We had like 16 PowerPoints for that webinar that we created. So we didn't have much wiggle room in there for, questions or, kind of side topics.
Okay, good to know. We'll capitulate. We'll follow suit.
Okay. Okay, well, if you guys have other feedback, feel free to shoot me or Shawn any questions, comments, things like that. So, okay, so all right, so that's okay. We'll go through kind of the market update here. So you can see we're back up in mid 40s on Market Pulse. It's been a couple weeks since we covered this. So if we kind of look back, when was our last weekly? That we like the 4th. So we were back in here the last meeting. So we just had, went up to 1 and came back to 2 and bounced again. So, one thing to take, I would say, take big note of is that we did cross the all-time highs here for SPX. So that's going to be strong support going forward. And I think I laid it out here. So, that's the 200-day SMA. We're not really, never really tested that on those dips in there. But, that's why, anytime it goes into state 2, I mean, you should, if you guys aren't a believer in that yet, buy the dips here.
Yeah.
Sorry, someone's loud. These are your best opportunities here, when things go into state 2, and, if hopefully you guys are believers in that. So if you look at, we're definitely in the overbought range now, up above 45. That's kind of like my threshold in that area. So we're up there right now. It can go higher, obviously, get up in the 50s and stuff. But in general, this is kind of like one of those areas that overall we're overbought. So if we look at,
Josh?
Yep.
If you go back to that
Mhm.
pie chart, I tracked this pie chart, the
Mhm.
green in the pie chart, and it is at 78.99 as you're showing.
Yeah,
If you go back to September 2nd, which was the last peak, it was only 68 something.
September what?
Second, which was the last peak
Yeah,
before it started dropping. It was
Right.
66. That's 78.99% of stocks in your database are in a bullish state.
yeah.
Is really high.
Oh, the current one, yeah. So this only got up in the low 40s, but
Yeah.
yeah, it's not an exact science. It's just kind of like a general indicator. But yeah, you're right. I mean, the overall is way up there.
Now, is this database the 4,000 stocks now, or is it still the 1,000 original?
No, this should be the 4.
Okay.
Yeah,
Okay.
yeah. These should all now I'll verify it, but these should include all 4,000. And all
It's
the
very overbought to me.
Yeah, yeah, and all it should be updated all the way back to '07. Like these screens for all 4,000. So yeah, it should be the 4,000. But yeah, definitely. I mean, that's really high. And you can always go back and look at different peaks.
I went back today and looked at September 2nd, and I forgot the date, but I think it was February 19th, which was the peak right before, that big downturn in February, March.
Yeah, before the virus thing.
And I in an Excel file, I have been tracking this green part of the pie chart.
Yeah.
I started about a month ago, and we had a low in the green part of 30%. No, it was like 38.29%
Mm-hmm.
on November 2nd, which was only 16 days ago.
Yeah.
On November 2nd, it was 38.29, and today it's 78.99, which is above the percentage it was on September 2nd, the last peak,
Yeah.
and above where it was on February 19th, which was the peak before that
Right.
big drop. So it's an amazing number of bullish stocks.
Yeah, a lot of breadth, if so many are.
Josh,
Yep.
when did you roll out all the additional stocks?
That was a week or so ago.
Yeah, so that might account for, we see a lot more now, that they weren't including before.
No, he said they
Right.
they put all the back data in back to 2007.
Yeah. Yeah, everything should be backdated with all the new symbols going back to, all the way to '07. So these screens should.
So with the pie chart, oh, okay, it would reflect then if you went back and backdated to the beginning of the month, it would reflect what it was then? I got
Yeah.
it. Okay.
Yeah, it should, and I'll verify that. Because we talked about, they said they were going through the update all the dashboards. So that would be in, something, it took them like a week to do it. But we wanted to make sure everything was, reflecting the 4,000 symbols in the system before, we pushed it out. The one laggard was studies, which is updated now back to 2018 for all the new symbols. The new liquid options list, which is, that went from 300 something to like 410. But yeah, that should reflect the current 4,000. And I'll verify that. So just to make sure.
The last studies email, which was a couple days, the link still didn't work, by the way.
Oh, it didn't?
No, it still went to no data found. And so now, once you told me on email the other day that how to find the studies without that email,
Yeah.
I've been going every day and looking at it. But just to let you know that the last email I got, the link still went to no data found.
Let me,
Yeah, I saw that too, by the way. One comment I wanted to make about the green bars there, I think there's a correlation, or there has been a correlation to vaccine news on those big green bar days, because we've had significant bullishness on the Pfizer and the Moderna.
right.
And those announcements came over the weekend, so all the action really took place when the market was not open. So I'm not sure there's a trade in there, but seems to be everything goes up when there was positive good news on the two vaccines, and then it trickled off the next few days. And I'll bet you your percentages become more normalized a few days after those announcements.
Yeah, sorry, I was just checking the studies. You're right. I never click that.
I click it every time, and if you then manually go to that day and go to the filter, the funnel thing, there are studies there.
Yeah, yeah.
Right.
That's where I always go.
Yeah. Well, I didn't even realize that till you told me, but the link still goes to no data found.
Yeah. Yeah, I'm always just go, log in, check this, and then go to the studies, and those populate.
Mm.
Yeah, so they should go back to 2018. That's when we first started publishing them. So, and that'll include the new liquid options list. And you can pull that up. This one right here, new liquid options. You guys should have that. And if you just go and search for equity, you can look at the list. There we go, 408. So they're all in there now. And you can go through and look at them if you want. So yeah, going back to Dave's, yeah, I don't know if there's anything else priced in as far as the vaccine. We have two candidates out there. Somehow Pfizer went from 90 to 95% effectiveness. So in a few days. So, other than availability, I don't know if there's much else as far as, vaccine news that's going to be driving the market. I think a lot of it's based off of, what's the outcome of the the election. I think that's a big thing for the market next. I don't think the Fed they're going to do anything. If there's a change of leadership, if the administration switches over, obviously it'll be a lot different for the market. I think a lot of things will change, and but we'll just see how all this recount stuff goes.
Josh?
Yep.
Jean?
Hey, Jean.
Did you have a new category for predefined for new liquid options? I don't have that.
What's that?
New liquid options in the predefined list.
Yeah, you should have it. If you don't, I'll just make sure that he releases it.
I just have liquid options, not new liquid options.
Okay, I'll make sure they release it.
I mean, how is that different?
This was the old list from our, when we had 1,000 stocks. So do you guys have all optionable?
No.
Okay. So they just have to give you guys access. It's just one of the things that kind of slipped through. So this
Okay.
is all 4,000. This is all optionable.
Uh-huh.
And then the new liquid options, that's the one that, I went through individually and screened out, the candidates. So there should be like 400 something in there. So they just have to, I can't do it. They have to give access to everyone. So.
Okay, those two then. Thank you.
I just checked my system as well, and it's the same as what Gene was saying. I don't have all optional or new liquid options.
Okay, yeah, we'll, once I'm done here, I'll send them an email to get those released to you guys. Okay, yeah, sorry about that. I thought they had done it, but obviously lots of things we have to do and, for in the system. And sometimes things slip through the cracks, so. All right, where were we? Okay, oh yeah, so as far as, obviously, we're overbought. If we look at SPX, we did the 1-2 thing. So we're back in one, it hit the target. Target 2, it did kind of close to an average move, not quite, probably around, a little below 4%. So, and, if you look at this big move here, I just kind of watched that, because it's going to be that target 2 is pretty strong, resistance. So we just have to watch that. Normally it'll come up and then kind of pull back, like it did here, make a run, and then, get up near 3. So, that's just kind of the stuff you're watching, and that obviously is key support here, that entry price. And you can see it's behaving properly, bounced off that, and then, support down here, make another run, and kind of see where it goes from there. For the Russell, so the Russell is really bullish, which is good for overall. I mean, this is, it didn't, SPX went in a state 2 here. It didn't, it bounced off those stop losses and just roared back up. The Russell outperforming is like a, that's the 2,000 small companies. That's very bullish for the economy if, the Russell's outperforming the other indices. So, that's a good indicator, that the market's been, could be really strong depending on how things roll out in the election. But, so it didn't even dip into state 2. It just turned around, and now it's up in no man's land where it can go for quite a while. But what we do typically see is when the market rolls over, it'll come back down. Generally, it comes back down to that target 3 when it does roll over. So when that happens, not sure. But obviously very overbought as far as, our market pulse. So just be pretty careful at this level here. Okay. So questions? We made new all-time highs here. I don't know if we made them here. Yeah, it looks like we did on the Russell. That thing was stuck forever. We talked about that for like a year where it wasn't, wasn't getting over that 1,600, broke out, pulled back, and then it just shot. So, so all-time highs in both. It's very bullish for the market that, this one's actually leading right now, the momentum. So, Not saying that there's not going to be, a pullback in the very near term, but overall, like long, kind of medium term, this is a very good, I would say, sign overall for the market. And I'd, consider kind of looking at those small caps more so than the large caps. If there's going to be a lot of growth in the economy, it's evenly distributed, whereas not, just the big companies are getting bigger, but, the little ones have a chance, and you can go back over time and look, a lot of the years the Russell led when there's like economic boom. So something to consider, but, it's strong, but overall this is kind of worrying. So I just watch those levels. SPX is kind of your key right now because this one's a little off the charts. So we can also, let's look at NDX. I know those are our main two that we look at, but it's always interesting. So this one's lagging, the other two. It's not above those highs. I'd just be, kind of the leading voices with this NDX are like the Google, Facebooks, and, they're going through a lot of, they're up in front of friggin' Senate panels every day now. So, I would just be careful with those names till all this gets ironed out. They're talking about making them like publishers. So until that irons out, I'd kind of stay away from those kind of big social media names. See how that all boils out.
Josh, can you put up that chart again?
For what?
Of NDX.
Down below?
The chart. Oh, there it is. Yeah. Okay.
Yeah.
So it's in.
Yeah. So it made those highs in September, like the other ones, and then it hasn't. The other two have topped that, whereas this one has not. And it's been showing, relative weakness lately. And this has been leading for a very long time, the leading kind of leading the market higher. So just be careful that, this may be, first sign that it's a rotation from, these big tech cap names to, more industrial, smaller companies. So could be the first kind of warning here, I think.
Yeah, one thing I've noticed is that there's been, because I have a lot of tech stocks that are not necessarily the, big eight, Microsoft, the FANGs plus a couple, 2 or 3 other ones. And by the way, Tesla just got added to that.
Yeah.
So I think the theme that I've seen is that there's some concern about the valuations that have run up without a whole lot of business run up in those larger companies, and that a lot of that money is being funneled into other NASDAQ companies that aren't the big 8 or so.
Yeah.
That's what I noticed. So not necessarily into a different index, but others within the NDX that aren't the big, 5, 6, 7, 8, however many you want to put there.
Right. Yeah, well, I mean, those multiples are really high. I don't look at that too much. But yeah, I mean, for Facebook, it's a lot easier for a small company to, grow at 20, 30% than, Facebook to continue to do that. How many more people in the world can join Facebook? I'm not on it, by the way. I will never be. So, but at some point, the industry matures or competition starts to seek in. I mean, that's the big thing with these things. There's no competition. There's no other real Facebook. Or what is it, Instagram? Like Facebook owns that, right? So there's not a lot of competition. Google searches are like 90% of internet searches. So if competition starts eking in new platforms popping up, then their margins are going to get cut a lot. And that's typically what happens, as industries mature. So, I think their biggest headwind is, this their problems with Congress right now. So, especially the social media type. So that's my take on it. And I'd just be careful with those social media type companies. So any comments, questions on market overall?
No, but one of the other things that I've heard that makes a lot of sense too, especially with a lot of the technology stocks, is a kind of a rotation out of a lot of the stocks that were COVID related, that were benefiting from COVID, that were
Yeah.
stay at home, things like that. And because of the new vaccines, they're starting to see a rotation out of those kind of stocks. And they
True.
were a large part of what was going on with.
Yeah, and you're seeing pops for things like like Boeing. I guess people see kind of the end of this coming with the vaccine starting to be rolled out. So yeah, those Zoom players where everyone's working from home, if that ends in the near future, then a lot of things are going to start going back to normal, I would think. And I think the platform's still going to be used a lot, but not as much as it was. So yeah, I agree with that too. Anyone else? Okay, so that was the market update. All right, so let's go into some of our new little features. I'm not sure if we covered this before. So we've been working a little bit on institutional insider trading. So, you have this list here for institutions. Obviously, these are not major players, 1%. You can click on names and it'll give you in a new screen, their holdings overall. So if you, this is a Bank of New York. So you can look and see what their holdings are there. The thing that we just added was a graph. So we can see over time. So this is like, so institutional data comes out every quarter. So these are just quarterly snapshots of total holdings for the different symbols over time. So you can see, it's gone up a lot over the recent. So you can look back over time for all these different symbols for that institutional trading. And then for the insider, we had the same thing. We added a graph in there, so you can. And this one is a basically like day by day. There can be things that come out the 9th, the 1st. So whereas the institutional just comes out at the end of every quarter, these come out, and we're going off of the filing date, not the actual transaction date, because that's that's when the market knew. So we're going to be building a little bit more for signals for this, looking for these like open market type things. But in here you can go back. It's not a fancy graph, but you can go by year, and you can look at, okay, they're accumulating, selling, and you can scroll down here and look over time, or you can just see the whole chart here and kind of zero in on the areas that you want. So so that's a couple things we just added as far as the institutional insider trading. So this helps with the so you can see things a little clearer. So any questions or comments on that?
Yeah, quick question on that graph is how is the graphics related to the stock splits? Because they're for 4-to-1, 7-to-1, whatever, you're gonna have a whole lot more shares out there and they're gonna be bought up more, but is there a way to annotate, put little timelines on there, like for notes that you want to make yourself and kind of save them, or can you, what's the best way to do that? Like take a picture of it and
Yeah, right now would just be
annotate it in another application, blah, 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 and then try to save
yeah,
that.
right now it would just be, take a picture of it and make your own annotations. This is just, we built out the basic functionality. We didn't know, we don't know, we're not sure exactly how much, we want to go into, like the other charts where we have all these functions on the side, and, the slider where you can like, make it bigger or longer or shorter, things like that. So we weren't sure. So we just built up the basic functionality and see if we want to go anywhere from there. But yeah, you just have to do the manual annotations and like a snippet or whatever.
Okay.
Okay, so no. Anyone else on these? I think we got to dig into them and kind of look, see, if they're front running moves in the stock or things like that. So we'll see. We have a lot of research to do on this stuff. So, okay. So next one. This one just came to me while I was driving a car. So what we did, so we have options expirations, right? With the chains. So if you go into these different chains, you have a certain amount of volume and open interest. And from 2 weeks ago, they answered the question that open interest doesn't reflect until the change, doesn't reflect until after the close. So the open interest is going to lag, because we're taking a snapshot right before the close. So that open interest won't be reflected until the next day, the change in open interest. So before we saw like, if it was like 5,000 here and there was like, 50,000 and the open interest only showed 5, that's the reason, because this doesn't get updated till the end, till the close of the market. So, so what we did, so we took snapshots of certain things. So this is the monthly expirations. Well, actually, I think this has weeklies too. So it takes your call put volume ratio for all the different, upcoming expirations here. And we just give you a single screen of, this is Apple for the upcoming expirations here. And how many calls, how many puts are involved in each one of those. And we did the same thing with open interest. So it gives you a quick, okay, where do we stand, for all expirations on Apple as far as open interest and, the timelines and things like that. So from there, we went into the volume. So here we're going back as far as when these things were in, their inception. So for the, November 20th, it tracks since it was created, the put, and, then this is a daily snapshot of the put saying calls total for the trades. So you can see, obviously, each day what the call and put volume is. And you can go up here and you can select, we gave up to 5 expirations. And these are only the monthlies that we're looking at. So, here's December's, and then, the January one is going to have a lot longer. This is a leap, so it was created way back when. So, it just gives you overall the daily trade volume for each call and put here. And then from there, we did the open interest too. We had one data point issue here on the 31st. It was it's a bad table, so they're fixing that. But yeah, if you guys see any issues like this where it's showing 0 and you know it's not a 0 for Apple, so I saw that this morning, and our programmer's going to fix it. But in general, we're showing all of the open interest contracts for all these things. And this might be, and when did Apple split? I don't remember. Seems like wasn't too long ago. This may be a split day.
It was kind of the end of August or 1st of September, I think.
That may be the issue.
It's probably
yeah, they're looking into it. But yeah, so we just wanted to be able to see, how things, and maybe I'll pull up a different one here. Let's look at MasterCard. So, obviously we're looking, things like crosses and, big spikes and things like that, open interest and volume. So these would be, any crossover would have happened the previous day, but because it's reported, not until the close, so it's kind of like a day late for open interest, and there's nothing we can really do about that. But I think it's, very interesting to be able to kind of see, before you get into different options trades. Yeah, Apple split 8/31. Go figure. That's the day that the table's messed up. So they'll fix that. You can look at, okay, it just gives you a quick kind of snapshot of everything, the history of that option, that you may be looking at, like how is it, because we have IV rank now, so we can look at that stuff, and now we can just see in general, are things accumulating, are these spike days, good trade entry points, things like that. So we created all this, and you guys can give feedback on it. You guys have anything right now?
No, I have to play with it a little.
Yeah.
And Josh, when you talk about the put-call ratio, I've always found that pretty confusing, because it's like, well, is that ratio for them buying or selling or both? I mean, that always seems so confusing. Do you have any opinion of that?
Yeah, so like put-call ratio, that's like a cumulative measure. So looking at all puts and calls. So it's not this is a lot like, I had them do this because this is a lot more targeted based off of expiration. So like you could figure out your, good Lord, your put call ratio based off of, your totals here. But I think this is a lot easier to kind of look at. If people are super bullish near term, but longer term they're bearish, that may give you an indication. That put call ratio, I think it's kind of a generic term that doesn't give you much information, whereas you can see here, December they're pretty bearish, if going into for MasterCard, whereas longer term, okay, and this is based off of, yesterday's trades, but you can look at open interest too, and just kind of get a more targeted, like, based off of the time that you're looking at, okay, if you're looking to buy, January, you can look at, okay, it's slightly, a little more yesterday on the bullish side, but overall, the open interest is still slated towards that, the bearer side slightly. And you know, you can go back in time and look at, you know, how were things normally. So I think it just gives a lot more targeted information than, you know, the put call ratio would give you.
Okay.
Mhm. Anyone else? You guys think could be useful or no? No? Okay. I think we have Mr. Shawn on here. Shawn, you there? Let me, give me 1 second here. I just texted him. I see he's in there. Okay. While we're
I'm
waiting.
here. I'm
Yeah.
here. I lost you for a second. It was weird, and then it kicked me back on. So sorry about that. Of course, right at the time you asked if I was here.
Okay. Does anyone
all right.
have general questions for Shawn? Kicks off here. All right. Bob, you have a question, you can just unmute. Or if you want a private, you can message me.
What was that David said about Tesla? They added Tesla to something. I mean, because it did go up quite a bit today. What was that, David, that you said?
To the S&P.
They
That-
decided they being whoever was in charge of who's in the S&P 500 decided to add it. Now I'm not sure that they've figured out how to add it yet. At least that's what I heard yesterday. Whether they want to add it a certain percentage over time because it's so high priced. But the news was that it's going to be part of the S&P 500. So.
Oh, okay.
On that
Yeah,
news,
because it shot up a lot from yesterday.
Yeah, and Dave, when are they going to put it in the S&P? That's coming up in December sometime?
I don't know what the dates are. Sorry, but yeah.
Hey, Josh.
Hey, Bob.
Hey, I'd like to start a little bit of a dialogue on the metric ROR.
Okay.
When I hear presentations in webinars,
Mhm.
ROR is never discussed. The other metrics like total return and what's the one that Ashok likes so much? The very first one on the left-hand side.
Profit factor.
Yeah, profit factor. They get a lot of attention. I feel strongly that ROR is perhaps the best metric for options traders because what we really care about is the percentage return we earn each day.
Right.
Because we're short-term traders.
Correct.
So I'm hoping in the future when we talk about returns, for example, when I'm going through studies, I'll drill down on, I'll backtest an individual study, and then I'll make note of the ROR to pick out the ones that I really want to focus on. This is probably a bit of a personal thing with me, but I wanted to introduce the idea that it's worth discussion in the future.
Right.
That's all I've got.
Yeah, I agree. I mean, how much you're making per day. I think that's definitely something, every option trader should care about, as to how much you're risking. If you just compare, like a bull call versus a bull put, I think that things like that can like cut through the noise to tell you this, you're making more here, based off of how much you're risking, on a daily basis. I mean, if you think of it like like a business, right? So, businesses, they care about how much they're making each day, right? Not, so, I think that's definitely something, we can focus more on, as far as, the different strategies and things like that, and showing people, okay, here's ROR, explaining that. I guess we haven't really talked about it in here too much. So that's something we can definitely, start diving into more. I think it's a good idea.
And ROR also speaks to the efficient use of capital.
Right. Yeah. So yeah, we'll take that on board and start, see how we can, introduce that to a lot of the people. I'm sure they haven't heard that much, or at least we haven't talked about it much. So I think that's, a topic we can cover some more in detail. Okay. Yep. Thanks, Bob.
That's the main metric I use as well, ROR, on a trade.
Yeah. Yeah.
I don't do it per day. I'm not sure what you mean by ROR per day, but I measure the return on risk for the trade to decide which ones I'm going to take.
Yeah.
Well, ROR by definition is the percentage, the way they figure it, sit here. ROR is the percentage return per day. So there's two metrics side by side. One is the dollar return per day, and then next to it is ROR, which is the percentage return per day.
Well, for a comment on that is, you can use that measurement per trade. You can use that measurement per segment of your portfolio that you allocate to options, or you could apply it to in different ways. I think everybody's got a personal view on how they measure themselves. But this, the ROI is really, when you think about strategies, the strategy you pick tends to pigeonhole you into a certain range of ROR for that strategy. So I'm not sure how you focus that. I mean, maybe it's worth a discussion, but I have different strategies with different RORs, if you will, in play all the time, because I like the way they all kind of balance themselves out with the portion of my portfolio that I allocate to options traded versus, long stock. So I mean, it's not a formula kind of scientific driven discussion, more than a personal, how you evaluate risk and where you're comfortable, allocating on a trade for trade basis, or in a group of stocks per quarter, kind of a thing, or whatever. But it is kind of personal, I think, and it might be worth a discussion, but I don't know whether it's something you want to try to force into a study kind of thing, is all I'm saying.
Well, I know we have those metrics in there, so they're already calculated, even for when we're looking at like the earnings plan. I mean, we know how many days in trade it is, we have all that data, so it's, it's already calculated in the system. But I think, kind of drawing attention to it, I think that'd be useful for people to see, and they can decide how they want to apply it. But
I agree on a trade by trade basis, and when you're choosing a strategy and you don't know, it's a very valuable piece of information. So I agree with all that.
Okay. Okay. Before Shawn starts, we just sent out an email. So we posted all the videos for the webinar. It's under a playlist here. If you go to our YouTube channel, so click there. It's got.
I want to thank everyone.
And Shawn wants to thank everyone. So it ended up being 16 sections. So we cut them down into manageable parts here. So So if there's individual studies that you want to review or whatever, you can go into those individually, or watch the whole thing or whatever. So so that's available now, and there's an email sent out. So with that link, but if you just go to YouTube, it's there also. So
Excellent. Thank you.
okay, Shawn, you there still, or did you leave? Hopefully you're not on those bad headphones. Yeah, we don't hear you,
Can you
Shawn.
hear me, Josh? Yeah, can you hear me now?
Yeah.
It keeps dropping for some reason, but yeah, let me share my screen real quick and I'll show. So I had heard what you were talking about with the ROR, and so this is just, I just pulled up one real quick. I pulled up one real quick back test that I did. I think I showed it before, that FANG back test with the MACD. This long call here, and we can see the ROR data is right here, 1.76%. So,
Right.
So somebody might be able to interject, but I know that
Shawn, we're losing you.
like we talked about, that's per day, right? So we're assuming each day, right? So each day you're going to get that percentage.
Yeah, that's telling you you're getting 1.76% per day. Yeah, you're still breaking up, Shawn. You're kind of in and out. Hello.
Yeah, I might have to call in just to call in and then do it that way. But for some reason, my internet's.
Yeah, I would call in. Okay, while he's doing that, questions in general, anything? Sorry for the delay. Does anyone have general questions about anything?
Well, I have sort of a request, maybe I'd throw out there, just for a sort of a request for collaboration on an idea. And it centers around elections and pot stocks, for example. I've noticed that like there's a pre-runner kind of thing for pot stocks when it comes to election years that are like significant, and the implied volatility in those particular stocks is like really high. So that and clean energy stocks. I watch those quite a bit, and if there's anybody else that would like to, share research on green energy stocks, let me know, because I'm doing that with a couple of other friends that are traders, and I think it might be useful to find. There aren't that many companies right now in green energy, but with the emphasis, and especially with Biden's disclaimer yesterday on his presumed policies here, I think there'll be a lot more interest in that area, and there's going to be new companies that don't exist yet getting into it, and it might be. I'm looking for anybody that wants to share research in green energy stocks. So if you do, just send me an email, and I'll send you what I'm looking at, and we can go from there.
Yeah, just you can reach out to them in chat there. I think you guys can send private messages to each other, right?
Yeah, so it's not, I just want to send to everybody, and take it offline. It probably doesn't, and we shouldn't take up this forums talk, but outside collaboration.
Okay. So reach out to Dave if you guys have interest in that. Anyone else?
Josh, I have one question.
Hey, Russ.
Certain stocks like Tesla is going to be doing well, like Dave was talking about with the clean energy. Is there a way of finding out like the supply chain that deals with Tesla?
Oh, Lord. That would that'd be like an analyst report, I would think, have suppliers.
You can Google it. There are I've never done it on Tesla, but if you go to any major electronic device like an iPhone, they have, you can Google it. I forgot which companies do it, but there's people who actually tear them down and tell you every chip in the iPhone and who made it, right? So there's probably a teardown report of the iPhone 12 that just came out somewhere on the web already. And you can probably, Google a teardown report of Tesla Model S or something, and it'll tell you where all the components came from.
Well, that's cool.
Yeah, yeah. I used to do it all the time, look them up all the time in my corporate life. So.
Yeah. Huh. That's interesting.
Yeah.
While you're up, do you want to? I pulled up your earnings plan since we're waiting for. I don't know where Shawn was, but.
Yeah, if you can check that filter I had on. Yeah. But and go down to the bottom. I'm where I have the. I'm hitting 77% of the trades. This includes some trades I took on paper in October when I first started doing the plan. When certain trades I was skeptical about, for example, like Avis or Delta, I put them on a TOS simulated account, or certain trades that were, one contract was too beyond my risk limit, like a contract on Google or something.
Right.
I put them on the TOS simulated account. So it does include some percentage of paper trades and live trades, but you can see I'm sitting at 136 and 40. And, other than where I traded earning the butterfly, what did they call them? Iron flies instead of the short strangles on the non-movers, I've been following all the rules exactly as written. So, and then after October, I was satisfied that even the trades even the trades on industries I didn't like Delta Airlines, worked. So I stopped doing the simulated trades now because it's just more work. You have to do the trade. You still have to set an alert to close it at a certain time and all this stuff. So after that, I just said either I take the trade or I don't. So I took it live or skipped it because, it was, there's certain stocks that are just highly valued, and even just one position costs you so many thousands of dollars.
Oh,
It takes you out of your risk tolerance. You know what I'm
Right.
saying? So I just I don't do the paper trades anymore. But I think I counted 224 trades at the beginning.
Mm-hmm.
And obviously you can see I'm 136 and 40, so I'm doing the large bulk of them.
Right.
There are some I skipped right at the election, as you can see.
Yeah, I saw a bunch of those.
And some I missed because the earnings changed. And the earnings moved up and the trade date passed.
Mm-hmm.
So I didn't try and get into it after that. But still, I mean, over, what are we at? It started in mid-September is when trades really start.
Mm-hmm.
So 2 months, that's 176 trades.
That's a lot.
Yeah, yeah, that's a lot.
So
And
anyone's doing better than others, or they're all.
what's that?
Are any like the different models? Is there any that weren't doing well, or?
I have not broken it down by model, but that was one thing I was going to do at the end, right? After I finished Q3. I do think in October, the bullish pre-runners, now this is just anecdotal, so I haven't actually broken down the file, but the bullish pre-runners were hitting like crazy. You had you had high probability trades in an uptrending market.
Right.
And so you just had all these bullish pre-runners hit like in 1 day, 2 days, really, really quick.
Yeah. Well, I mean, that always goes back to, market direction before you enter a trade. So,
Yeah.
if you're bullish on the market, then look for bullish trades. If you're not bullish, then, be careful on bullish trades. Yeah.
Exactly. The other thing I did was, each of these has a time stop. So you want to set an alert to get out. Well, in Thinkorswim, where I trade, you can set an alert to get out before earnings.
Mm-hmm.
But like on a bullish runner, you cannot set an alert in Thinkorswim after earnings, like 20 days after earnings or something.
Yeah.
Right? So then I was putting that into my Outlook calendar. And so then I was having alerts in Thinkorswim, alerts in Outlook calendar, and it just got to be too many systems.
Right.
So now I just put them all. This is the follow-up action. The follow-up action. I just created a column, and I just do it all in this Excel file, right? And so I didn't have to look on different systems to see
Right.
what is my action that day,
Right.
which ones I have to close, because sometimes it was a calendar appointment, sometimes it was a task thing, and it just got to be too much of a mess. So one of the things about the earnings plan is I had to kind of refine my routines to make it efficient, which I've done. So when the earnings plan shows up, the Q4 earnings plan shows up,
Right.
now I have an established set of routines that make the workflow more streamlined.
Right.
For example, one of the things is I noticed like you'll be in a vol rise trade, right?
Mm-hmm.
And the vol rise trade did not hit its 25% profit target. Earnings are coming up.
Right.
But then recommended was maybe a bullish runner after earnings.
Mm-hmm.
Well, you already have a call, so why get out of the vol rise trade? You follow what I'm saying? So I just let the vol rise trade run, and then it worked.
Yeah.
So kind of analyzing the combination of trades, is helpful too, right?
Yeah. We
So
haven't really looked at that much, before, the combinations.
Right. And so when the next one comes, I'll be able to plan it out a little bit better, because now I've seen how they kind of cascade into each other.
Mm-hmm.
And, if a vol rise trade is going to go, then recommended is a bullish runner, then I'm not going to set an alert to get out before earnings. And I may, instead of going 60 days, I may go 90 days, depending on how far in advance that vol rise was recommended.
Right.
You follow what I'm saying? Because if the vol rise, you do a 60-day strangle,
Mm-hmm.
20 days later, you're up to earnings, so you've lost, 20 days. But then a bullish runner is recommended. You may want to have a little bit more time in that original strangle.
Mm-hmm.
You follow what I'm saying?
Oh, I do. Yeah.
Yeah, so I didn't really do much analysis, what I would say horizontally, to see what how these flowed into each other. And then I noticed they were flowing into each other. And when the plan comes in Q4, I will plan that out a little bit better.
Right. Okay. No, that's good feedback. Yeah,
Can you hear me, Josh?
Yep. Oh, there you are.
Oh, yeah. No, and I was going to say, too, I think I just had the computer on mute, but the phone was good. No, I think originally, too, I thought that's how the earnings plan was kind of set up in the Shook's mind, right? When you see a trade that's like a bullish pre-runner and then also a bullish runner, you could try to manipulate it and flow those trades into one another. I don't know what the results would be over the time span, but it seemed like that's why the plan was good, because it could show you, hey, this one's bullish pre-runner and a bullish runner.
Anecdotally, every time I let it run, when one went into the other, I'd have to analyze it, but every time it worked.
Yeah, and I've had some that's done that, where I did like a vol rise, where I did the strangle, so I bought the put and the call, or put in calls, and then I saw that it was a bullish runner, then I would just basically sell my puts and just hold on to the calls, and then I think, yeah, it's similar to what you've seen. That's most of mine have actually worked. But like you said, you want to make sure you're purchasing enough time on your options so you're going to not kind of get down to the wire whenever you get after earnings as well. So
Exactly. So by planning it out, knowing that's coming, I may change my DTE in the beginning, just anticipating that. Whereas I didn't this time. I was just kind of one ran into the other, and I just made the
right,
decisions on the fly. And
right.
so now, I can be more strategic in the Q4 plan.
Yeah.
Right.
Well, I guess, the cut to, are you up money or you down money?
Oh, I'm way up.
All right. Means
And
5% each, right?
yeah, and the trick, by the way, which I'll
Mhm.
say to the group, is to pass on those trades that don't that exceed your risk tolerance. Because there was one, for example, on Wayfair. Wayfair is a very expensive stock. It was a bullish runner and it failed,
Mhm.
right? It didn't work.
You ready to leave in a few minutes?
Pardon me?
All right.
Sorry, that's.
Oh, but one contract was like $47. If you took that and your risk is let's say $1,000, but you risked 4,700 on that one and lost, it's very hard to make it up
Yeah.
on
Right.
the other. So my experience is that you have to pass on the trades that you cannot fit into your risk tolerance range, right? I have a range of $1,000 to $1,200 on a trade risk, right?
Mhm.
And because of the price of the stock and the price of the option, if I cannot fit it into that, every time that I've made an exception, I always lose on that one, and then I can't make it up, right? And so if you follow that rule, I'm way up in October and November. So.
Good. Okay.
Good.
Shawn, Josh, are you doing analysis of all the ones that Delphian's doing for feedback? It's on a plan?
Yeah, we'll have that for the next webinar.
Yeah, we're trying to get all that data. Yeah.
Yeah, so we'll have that for the webinar. We'll show how the last quarter. We'll try and do that. We kind of just let Sudhir do it, but we're gonna have to go back and look at it, and create our own. So next quarter we'll be tracking it a lot closer. So we can show each week and things like that. But yeah, we'll have all that data, by the next webinar.
Okay. Can we see this one? Can that be put in collaboration? See the wins and losses and see which ones he did well and which ones didn't?
Oh, this?
Yeah, you can share it.
Oh, okay.
I don't have any dollar figures in it, just
Yeah.
comments.
Or account, your social.
What does the delta mean? Delta -7, 8?
Delta?
I think those were your days, right? That was like your base figure for days or something. So here,
Oh, the delta was just, you had an original earnings date, and then delta is not the options delta. Delta is just difference. In math, you use delta for difference. And they had an original earnings date in the first file they sent. I went through CNBC's website and I checked every single one, which took me like 3 hours. And in late September, and put in the new earnings date, and the delta is just the difference between those two. And that changed the trade date, right?
Mhm.
And even then, that was at the end of September. Then those earnings dates kept changing.
Yeah.
So I still missed other trades because I didn't update the earnings date, and it moved again.
So you're saying the delta is the difference between what you found out to based was on the earnings plan?
Yeah, the delta is the difference between the earnings date that I found on CNBC and what was in the original PDF file sent by Delphian, by Josh.
It's a lot
It's
of
just the
changes.
difference. If you scroll over one, it's just the difference between column, what is that?
This,
It's just,
Yeah, column D.
it's just E minus D, that's all.
I wonder what the difference in results would be if you just took the original estimation date and didn't worry about changing it at the last minute.
Dave, you can do that, Dave.
Change all that much. I'll bet it doesn't change all that much.
It
Dave,
might not, I mean, you could, but I was trying to follow the rules for the webinar, which is, you want to trade a certain number of days before earnings, and you want to get out the day before earnings or the day after earnings or whatever, right? And in that case, you have to know the earnings date.
Well, getting out, yes. I'm saying getting out, yes, I agree with that. But getting in, whether it's 1 or 2 days different on a 15-day lead, I'm not sure it makes a lot of difference.
It may not. I mean, I like I said, I was just trying to follow the rules this time. It may not make a difference overall. You're right.
Yeah, Josh has the analysis for that, for the bullish pre-runners and stuff like that, and it seemed like there was some of them actually had a fairly decent difference in the value that was produced profit-wise.
Yeah.
Right, Josh?
oh yeah, big time. I mean,
So even if it was-
some of them had like a group of dates. Maybe it was from like 16 to 12 were all good, good trades. Obviously we picked the best out of that, but some were just like, okay, this is the only winning day, like 18 or, pre-runner 18 days before, and all the rest were like break even, and some were losers. So some stocks were stronger, but, versus others. So I would assume, if you don't do it on those specific dates, I would think your results would lessen. It wouldn't be as good.
And that's why if you were pointing to ATVI, which is row 223, if you look at ATVI over to the note, it says missed due to change in earnings. And the earnings changed. By the time I noticed the change in earnings, the recommended trade date, how many days before, had passed.
Right.
I didn't try and get in. I just said, well, there's 224 trades. I don't need to chase a single trade, right? I'm
Right.
just going to, I missed the day, I'll move on to the next trade, right? And so there's a lot of these that I missed because, and I skipped a lot during election week. I was really nervous, but there were a lot I missed because the earnings kept changing. Hopefully that won't be the case in first quarter, because that was the most frustrating thing, is the earnings date keeps changing.
Yeah. No, I mean, since the pandemic, it's been pretty crazy. These dates.
And there's nothing Delphian can do about that. I mean, it's just the environment right now. I mean,
Right.
so you have to watch those earnings dates, and if you're going to follow the recommended entry and exit days around earnings, you got to keep track of those earnings dates.
Yeah. Okay. Yeah, we definitely appreciate you doing all this work and sharing it with us here.
You're welcome.
All right.
One other question on the volume crush or rise. You did the fly on that. Did you use a regular money market range?
Yeah, I just, you look at the expected move.
Right.
And it's just what Shawn said, like if it's a Monday, I'm using a Friday expiration, but if it gets to Wednesday, I'm using the next Friday's expiration. You just do the expected range. So I'm selling a put and a call at the money, and then I'm buying a put and call for protection at the edge of the expected range. Expected move, sorry, expected move.
Okay. Now, what's the difference between the rise and the crush?
Rise is beforehand. That's where you're buying either a straddle or strangle prior to, and you're getting out before.
Okay.
Yeah, before the announcement, and then the vol crush is that either 1 or 2 day type thing.
Okay.
Yeah, the vol rise is,
Butterfly.
yeah, That's just pretty much exactly of what you would think of the vol crush, right? Vol rise, you're looking for that volatility premium to increase into the options, both puts and calls, is where they start increasing the value of the options based on increasing your upcoming volatility. And then the crush is obviously the removal of that volatility out of those options.
Is that you, Shawn? Background noise?
That was me. Could you hear me or no? Is it messed up?
It sounds like you're cooking something.
No, I'm not cooking it.
Just for
I'm not cooking.
clarification, you guys, it's Jean again.
Hey, Jim.
On the vol rise, you're buying the strangle and straddle. Is that what you're saying? And on the vol crush, you're selling the earnings buy?
Yep.
Okay, I'm clear on that, right? Okay.
It was a strangle or a straddle.
Yeah, whichever one tested better.
Right. And in the Excel files they sent, they have a comparison of which one had the higher probability of higher win rate, right?
Right.
Most of them were the strangle. There were a few that where the straddle was better, but most of them were the strangle.
Right.
Oh, okay, thanks.
All right, Shawn, you got a few things?
Yeah,
right?
as long as you can hear me okay and it doesn't feel like I'm cooking anything. I was going to switch over to the computer audio, but I'm not going to mess anything up. So,
No, don't do that.
okay. Say again?
Don't do that. You can
No,
share.
it seems like I have a problem when I do that. So, yeah, well, no, that was good. I mean, the questions, kind of what we went over, and yeah, what I wanted to show you guys, and what I know everybody heard me say was the ROR on this one. You should see right now this FANG position, the return, on risk per day, 1.7%. So, there's a couple things that I wanted to go up, and kind of covered them with the questions, and here covered them as well, but. Really, mainly, it just seemed like, post-election, the bullish pre-runners and even some of the bullish runners have been working really well. But, the market's at, all-time highs. We're at new highs every day. It seems it's trying to make these big moves to the upside no matter what's happening. So, those bullish runners and bullish pre-runners have been working well. I have some of the bearish runners in my personal account just to try to hedge, for the lack of a better word, and those haven't been doing so well. So, I'll kind of stay tuned on those to see how those are going to play out. But, just want to make sure everybody, like you've talked about, has been using, our earnings plan. Josh probably had mentioned earlier, we're getting ready to construct the one for the Q4. So once we do that, we're going to try to take into account, just the different things we hear on the meeting here and just improvements that we can make going forward to make it, a little bit easier to use and more proficient for everyone to basically be able to trade these trades as they come out. And hopefully we can get those results for you. Like Josh mentioned, the next webinar, I was hoping that our coding team could go in there and easily pull that data in and put it to a virtual portfolio for us based on the results. But I don't think it's that easy for them to do. So we're going to have to, Josh and I are going to have to figure that out. But, there's been a couple, there's been a couple come out lately. I mean, if you see one like this, Target worked really well. We can see Target as a bullish pre-runner on 1026. That one moved up nicely. There's been a couple of vol crushes that have come out, and the profits haven't been as well as, had been expected. That 40% profit target has been a little too high, but there's been a couple that have come out recently on the previous page. If I go back, I might be able to see it, but like Disney had a vol crush come out, which is well above and beyond it now, but you were able to capture like a 10 to 15% profit if you're able to get out that next day. And Home Depot was similar, with a similar like 10 to 15% profit on, on that trade. Lowe's had earnings come out last night, and that one, last I checked, it was actually dropped down about $10 below my strikes on the actual earnings slide for that one. So I'm pretty much at a max loss, and those options expired this Friday. So it came up a little bit, so we'll see. But I've still been doing the vol crushes. I think we still have some really good validity in these trades. But I can get everybody's opinion on this if anybody wants to speak in. But it seems like a lot of volatility was pushed into the options price-wise, prior to the election and kind of following the election a couple of days after. And now it seems like maybe a lot of this volatility slowed but surely kind of coming out of those options. Does anybody else see that, agree with that, or disagree with that? Not really?
It's hard to say.
Yeah. Yeah, it just seems like a lot of options were really expensive, and now they're not as expensive, or a lot of my options just have lost value, you know?
I do think on the vol crushes, they've been, Lowe's did not work. I was in that and it tanked. And what I've done on that one is just close the short put. And I'm hoping the long put will appreciate enough to, you know, for me to break even. But
Gotcha.
I do think on the vol crushes, it was the only one that had a 40% profit target.
Right.
And most of my vol crushes, I closed out before it hit even the profitable ones. They were sitting at, you know, 10, 20, 25% profit. And I'm like, well, I'm just going to take it. So I think one feedback would be, I'm not sure why the vol crush was run at 40% when, you know, the bullish runner, the bearish runner, all those are run at 25%, right? It seems out of, I don't see a reason to wait for 40%. I mean, if you're sitting at 25% profit, you know, take it.
Right. Yeah, and I don't disagree. And Josh mentioned that the other day, that for this new Q4 that we're going to do, I think we're going to try to test out some of those other percentages, you know, 10% up to 40, and just kind of see where the sweet spot, you know, kind of lies in those. And yeah, I think if you're getting out the next day, you know, after earnings, which is what you should be doing based on the vol crush trade itself, then you're probably not going to capture that 40%, you know. So
I don't think I hit a single one. I had many of them that were profitable, but I don't think any of them hit 40% because I was getting, because I was getting out the day after or the 2 days after, you know, if I felt like, you know, I could get a little bit more, but I don't think I can't recall any of them hitting 40. So I think that was a little bit in your test might've been a little bit too aggressive.
Yeah, and the test really didn't show the 40%. That was more just kind of some personal analysis that we've done that I put that in there, you know. So I think testing those other percentages, because typically you're going to be out, or you should be out that very next day, right? I mean, that was the original vol crush, or however earnings fly trade, was to get in on, you know, Wednesday, and then you get out Thursday, you know. And then we were seeing, okay, well, maybe if we pushed the expiration out till next week and held it a little bit longer, we're able to kind of capture maybe a little bit more profit. But that kind of takes away, I think, from the original creation of the trade, if you will, you know, because really you're just playing that volatility coming out of those options. So yeah, we're going to test that going forward and see, okay, you know, 40% too aggressive, let's kind of scale it back, you know. So, and then for your lows, when you close, so lows, you know, I did a 150, 160, 170, I think was my legs. So if lows sold off, then what you were saying here is you closed, in my case, you would have closed the short 160 put for a loss, and then you're holding the 150 put to see if lows will drop further in price, and you can just capture more money on that long put that you have, correct?
Yeah, I did the same legs. I think I went, I don't know why, I think I went a week further out because my expiration is November 27th.
Right.
But like Lowe's is sitting at 149. I mean, it's been tanking. So it's it's below the long put. The long put is now in the money.
Right.
You know, I closed early this morning. I closed the short put for loss, and I said, well, if it's going to tank, maybe the long put will make up for it, and let me just let it ride. Now the short call and the long call, of course, the price is moving away from that. So, I mean, I can just let them continue to decay and collect theta, but I'm hoping Lowe's, you know, if it gets down to 148, 147, the 150 long call should make up for my loss on the 160 short call. I'm sorry, 150 long put should make up for my loss on the 160 short put.
Right. So follow this for 1 second. So if you collect, let's say, and everybody try to follow and have questions if you have some, but let's say you collect $6. You might have collected more or less for the trade, but let's say you collected $6 for the trade, and you're risking $4, and let's say the market tanks. You close your short put, let's just say for $11. So now your net is you're actually still losing $5, all things being equal, right?
Mm-hmm.
So all you would need to make up is $5 on the put that you're going to sell, the 150, and then you're actually at a break even, which on some cases might not be too far fetched. The only reason I'd lay it out like that is because if I looked at it on paper, it doesn't seem like a bad way to make an adjustment on a trade, especially in a market like we have, and possibly a stock, like Lowe's or some other stocks that might be a more viable option,
Right.
So that's what you look at. You figure what your break even is after you make your adjustments and say, okay, well, if I can get this or at least get close to this, then I'm kind of recouping some of my losses on that trade.
Right. And I'm looking at my Excel file right now. My Excel file gets live quotes from Thinkorswim.
Mm-hmm.
And my long put is now profitable. I'm $90 up on the trade.
Okay, there you go.
So my long put, I'll close it after this call because I don't like to try to do two things at once, particularly trading. But
Right.
If it remains in that situation, the put has now increased in value enough to make up for the short call, which, remember, I closed at like 8:30, 8:40 this morning.
Right.
Because
right.
Lowe's dropped big.
Big,
So
overnight it was down big, yeah.
And I showed that I closed the short put at Lowe's price of 151.
Okay. So it already dropped $2 more, yeah.
Now it's dropped $2 more, right? So now my long put is in the money, and it is making up, according to my Excel file, for the loss on the short put. And I can close that, and I'll probably just leave what is left is now a bear call spread.
Right.
I may just leave it because
may leave that on there, yeah.
I may just leave it and let it expire worthless because Lowe's is moving the opposite direction.
Right.
So
all right, cool. Does
just
everybody
collect all the theta.
Right. Does everybody kind of understand Sahir's analysis on the adjustment of the trade?
Hello? Hey, it's Mark.
Hey, Mark.
Hey. Yeah, I mean, I get it, except if you get a rally, you're going to get that. You're going to be in trouble. So that's all.
Right. Yeah.
I've done
You're
that
taking
before.
the risk on for sure.
I've done that before. When you leg out, I mean, then you're just dealing with, different type of risk. You can leg
Right.
it.
Yeah, you're at right on the call side. You're correct. Yeah, I try to cover if I can. I'll try to cover my short calls. Sahir's options expire next Friday, but if I can cover my short calls for cheap, I try to take the risk off just because who knows what could happen. If it's going to get a big rally, or especially if it's on the put side, what happened if market sells off. I totally agree if you can do that.
Shawn?
Yes.
Gee, hi. Okay, I'm looking at NVIDIA, which you have on there as both a non-mover and a vol crush. And the non-mover would be a short straddle. I mean, do you decide which one you'd want to do? Because both of them would give you good premium, but there's more risk, it seems like, on that short straddle.
Most definitely. Yeah, typically I'm going to stay away from the non-movers just personally myself just because of that, because I'm selling a straddle or selling a strangle, and I actually have unlimited risk, to the upside and limited risk to the downside, but, really all the way to zero, right? So really I'm going to stick
during earnings, I would
say again.
Kind of, especially during earnings, but non-movers, that is what this is for, around earnings.
Right. Yeah. The non-mover is the same. Pretty much if you see one come in as a vol crush, you should see it come in as a non-mover, because your non-mover, you're just saying that the stock typically doesn't move X number of percentage points, after earnings. And then the vol crush, you're really taking into account pretty much a similar type of move, except you're wanting that volatility and those options to be a little bit higher. But you're right. I mean, you should look at these the exact same way, in my opinion, except for the vol crush. You're buying those legs on the outside for protection, which I prefer those. I mean, you got to pay a little money to buy the put and buy the call for your outer wings for protection, but the protection, in my opinion, far outweighs the risk potential that's there. You don't see it all the time, but if you think of last quarter, I mean, movers like Apple, Apple made that huge move to the upside, and I think even Zoom made a really big move to the upside. So if you just had a short strangle on, you would have, for the lack of a better word, got crushed on some of those trades,
Okay, so it's kind of one or the other, but preferably the vol crush is probably more.
Just for my risk tolerance, yeah. I mean, like I mentioned a couple times before when I traded commodities, that guy, all he did was sell strangles, and I couldn't talk him into buying legs. Like, he did not want to hear anything about buying an option unless he was buying an option to close. So
Well, that one on NVIDIA, that non-mover says short straddle.
Right. Well, we just tested it as a short straddle for that one, and it was whichever one had the best results, either the straddle or the strangle.
Okay.
But yeah, you just don't have that protection, and that one's a pretty risky one, right? I mean, that one, I think we're talking about almost a $35 or $40 expected move possibly on NVIDIA for tonight. So
I think
it was $40.
Is it 40?
Yeah.
I did the earnings fly on NVIDIA this morning, and that one. So I didn't do the short straddle.
Right.
Shawn, before you came on, I was saying to Josh, one of my feedbacks is I've never done the actual short straddle or strangle on a non-mover. That doesn't make sense to me because of the amount of buying power it takes up. And,
right. That too, sure.
Even if there were a lot of the non-movers and the vol crushes appear at the same time, but where in this plan you only had a non-mover, I still went back and did a earnings fly, right?
Right.
Instead, because a short straddle takes a lot of buying power.
Yeah.
Right.
Yeah.
Okay.
And I did the fly this morning on NVIDIA, and earnings aren't till tonight. And I don't know,
Right.
I'm up already. So volatility came out, maybe I'll close it after this call.
Right.
And not wait for earnings.
Oh, so
You're
doing it for next week though, rather than this week, because it's expected move of $30 for this week and 38 for next week.
Right. I did November 27th, yes. And because today's Wednesday, and I thought on Wednesday we do on the earnings.
Following,
if I recall,
right.
You do the following week is what I recall from Shawn's presentation. So I did going out this week it's not as wide, but next week it was like $40 expected move.
Right.
Okay. Good.
Yeah, and I mean these are the bullish pre-runner, all of these different categories were preset. Josh, I don't think Josh had come up with these, nor did I. These were ones that Shook had come up with these categories in particular, when the program was developed, I believe. So the non-mover, even though probably a majority of people would not use that trade as a trade for their particular portfolio, there are people out there that would use just the short strangles or the short straddles because those are just the trades that they like to have, right? They figure they can cover if there is that one-off where it moves 2 standard deviations to the upside or the downside, they can cover that risk and roll the position or whatever they need to do to kind of hedge some of that risk without actually having to buy some options. So there are people that do use that particular.
There's a lot of premium in that's for sure, especially that NVIDIA one.
That's right.
So it is, but it's risky.
Too much risk for me.
Exactly. Yeah, and me too. And I don't think. I mean, I think I can. Yeah, and I can do the vol crush, and collect a decent amount of premium and have that protection and not take as big of a loss, And I think some of the non-movers you might be able to see something. There's other ways we could maybe test it, like Dave might have an idea, with NVIDIA that he's big on the chip sector. Maybe NVIDIA is going to go higher. So then he might say, well, I don't want to do a short strangle or a straddle. Maybe I can just sell some puts. And then if I get assigned, I want to own it anyways or whatever the case is. So there's other ways you could kind of look at that non-mover category, I think. But yeah, for all purposes for myself, risk-wise, I'm just going to do the vol crush.
Yeah, it's too much risk for me. If there's people who can do short straddles and that much buying power, then more power to them, I guess. But
especially for one that costs as much as NVIDIA. I mean, that's a high price stock.
Right.
So.
Yeah, and like I said, when I traded commodities with that one guy, like it wasn't even my money, and sleeping at night sometimes was hard for me because I knew how much money he had at risk. So I could only imagine if it was actually my capital at risk, I probably wouldn't sleep at all. So.
So I have a question for you, Shawn, on NVIDIA.
Yes.
So I just noticed, since we're talking about NVIDIA, I put it in this morning and didn't really have any plans to look at it till tomorrow. But
Right.
now it's up 11%. Volatility just came out of it. So I'm up 11% before earnings. So would you close it today? I could just
Right.
take my 11% profit in 6 hours and go on down the road.
Yeah, and see, it tests well as a vol crush, but then you have all these chip makers like David talked about before having some pretty big moves, and we got some different volatility coming into the market. And I've come to it's taken me some time, but I've come to the realization, right, that one in the hand is better than two in the bush kind of thing. And I'm like, all right, let me just take the money and kind of walk away from the trade, right?
I might just take the money and run. And, 10% in 6 hours, 11%.
Right, exactly. And I don't disagree with you. And I think that's where this trade, we've learned, over the past months that we've been doing, these webinars or these meetup groups with this particular trade in hand, that there's a lot of adjustments that we can make to it. And I don't think ever it's taking a profit in that scenario is a bad thing, because I've looked at a bunch where I'm like, man, if I held it, I would have made way more money. And you just can't be upset with the fact of taking 8, 10, 15% profit in a short period of time, right? Because that's what you're looking for. If you can consistently do that, then you're making really good returns for your account, So
What
you're taking.
did you use for your short?
I used 540.
Okay, because that's what it's still looking like too. I started to see take
Yeah.
it and maybe do another one. Close it out and do another. Save that profit and.
Yeah. Maybe.
But that's what I was looking at too. Yeah, I was looking at the 540s, and I think I looked at $40 on each side, right? Like a 500 and a 580 is what I was looking at for next week.
Yeah.
So I had it set in another system, but I didn't actually input the trade yet because I typically. But yeah, I think if you have 10% intraday, like you say, I don't think it's a bad time to take the trade off.
Yeah.
In my opinion, so.
I think that's what I'm going to do.
So yeah, and then Dave, is Dave on the call? Or he was. What do you see? What the implied volatility is here on those NVIDIA options right now?
Let's see.
On the just on the 20th, I guess. If you have, I don't have my other screen up.
On November 20th, I'm
Yes,
showing. Sir. It says Thinkorswim shows an implied move of plus or minus 30.11.
The implied volatility is 80.
80, yeah.
80. Okay. All right. So this morning when I did this little outline for Josh and I this morning, and I had it at 90%. So it was like I think it was at 91. So it was at like 90, 91% this morning on those November 20 options. So now it dropped, to 80, which is where you're probably getting some of that value,
Mm-hmm. Mm-hmm.
Oh, that's odd.
Yeah.
Isn't that odd?
Yeah, I had it. Yeah, huh?
That's kind of odd, isn't it? I thought that usually went up close to.
Yeah, you would think it would be going up, but that would be something to note that it did drop. So the value of those options seem to have dropped a little bit as well. I don't know if something maybe happened, or if maybe something in the market as a whole, or maybe something within NVIDIA made those options kind of fall like that. I don't know. But yeah, I had it written down on my sheet as 90%.
Interesting. Yeah.
All right, cool. Well, I know we're taking up a lot of time for everybody. Does everybody have another 10 or 15 minutes, and I'll kind of run through the rest of the stuff that I was going to show you?
Sure.
I guess if you have to bail, you can just bail off the call. It won't hurt my feelings. So, are you good with that, Josh? So I don't know if Josh showed this earlier or not, but some of the studies, have come out recently, and we basically are, able to see some more of the statistics come out on the study. So I'm going to go back to the 13th, which was last Friday. And since we added all the new options into the account, into the Delphian platform, and some changes like that were made, some of the screener with the studies, some of the output wasn't particularly showing up as it normally does. So what I wanted to show you was there was a handful that had come out on the breakout strategy for the long call. And obviously, like we talked about, market at new highs. So a lot of these positions are probably going to be running pretty well at this particular point in time. But one that I wanted to show you and that Josh and I had talked about, I traded it, but I didn't get to hold it to the full extent of it, was Boeing. You know, we can see our win percentages are coming back into play now that they've updated that information. We get our profit factors there as well. And we get our actual total over the past, you know, since 2007. But we can see some of these. I mean, I know Boeing, CMI. I don't know about a couple of these other ones as well. But, you know, Boeing, this one opened up at 187. And I think pre-market this morning, before the market opened, Boeing was at 224, maybe almost 226. Might have come down a little bit now. I haven't seen it. But, you know, you can see some of these strategies with this market. I mean, just wanted to kind of pull this in there and let you guys revisit this, that there's some really good trades to be found in here. And what Josh had mentioned was the other day we didn't have these win percentages because they were updating that data. But looking at this list, I mean, there's really one there that stands out, and that's Boeing. And you know Boeing, most people know Boeing as a company. So you figure if people are going to be somewhat bullish, they're going to be bullish on a company like that possibly. So a breakout strategy for it to move to the upside, you know, wouldn't be a bad trade. So taking some of your own analysis and putting it into here is what we've talked about before. And I think that just kind of reiterates that fact a little bit with some of these strategies that we're looking at.
Now, refresh my memory, the breakout, this win percentage is set at a profit target of 25% on a call? Or?
Right, the profit of 25%, that's right.
Okay. Yeah.
So we're looking at the 100% stop loss, and then we're looking at a profit of 25% on the long call. That's right. And yeah, I mean, this one's probably a little more expensive, right? Because we're talking about Boeing. So yeah, you can see the trade was a 215 call for 715, so $715. So pretty expensive, you know, somewhat. I mean, I think if a lot of people are risking $1,000, you could do one of them. But you know, for the most part, yeah, just wanted to show you the win percentages are coming back in, and we can see some of these. CMI 91%, EOG 91%. So some really good percentages there on those. So those should be back, you know, so we can see the win percentages. I wanted to show you the Boeing one because, yeah, that one spiked up. I mean, I got out, I think, a day after, and then I didn't hold it to the big move yesterday and today. But, you know, there's another here and there. I was able to take the profit and kind of move on. I sent Josh also the information on that volume spike screener. I don't know if anybody's been looking at that screener or had any thoughts or ideas on it. What I wanted to show was I looked at it when we first had come up with it. So that was a pre-election. So I pulled it up on the second. So if I go on the second, I go into option filters, I go into option volume spike, and I just do percent. I try to get a lot of these in there just to get them in, and I can make my analysis further if I want to do that. But if I go in here and let's say I go percent on the call side is greater than 60, and it's going to give me 5 months worth of expirations, and the volume has to be over 1,000. If I hit find stocks on here, and again, this is from the second, so this is pre-election. So I wanted to go into the system and say, hey, where's kind of some of this money possibly moving? What are these people buying? What's happening before this election? Because who knows what's going to happen when this election comes about. So I did that volume spike just to get an idea of you know what it was looking at. And if we go in here and I just kind of sort it by symbol, one stuck out in my mind was Wells Fargo. So you can see Wells Fargo here for the 12/11 expiration, 70,000 volume on that day versus, you know, roughly 400 the previous day. If I go back one more level, you can see similar fashion on 11/13, they had an 87% spike, 11/20, 93% spike, and 11/27, 86%. So I said, wow, you have all this volume spike on the call side of these options, you know, prior to the election. So there must be a bunch of money coming in, or in my mind, coming into this in Wells Fargo into some of these options. And then if I do something similar and actually look, I'm going to duplicate it and look at the put side real quick just to show you. If I go into the put side, so if I go percent put greater than 65,000, I'm going to just do it fast so I don't take up everybody's time, especially since here I was wanting to get out some trades. So on the put side, now I'm still on 11/13, so I got to change the date once that loads. I want it to be on the second. So let's see if this loads up real quick. All right, so that's on the 13th. Let me go back to the 2nd and hit find stocks.
While it's loading, I have a quick administrative question.
Yes.
Are we having a call next week, being that it's the Wednesday of Thanksgiving? Just so I can plan my calendar for next week.
I think Josh and I talked about we probably are not going to. Josh step in, but I think we're going to postpone that one just because it is the Wednesday right before the holiday.
Okay.
Yeah, I don't think we'll do that. You know, people traveling. I mean, it's not a normal Thanksgiving, but still, like,
you guys might want the day off, right?
Well, I'll have
Right.
all three of my kids here, and they'll be loud, and you know, it'll just be a distraction. So, yeah, so we'll probably we won't have it next week, but we'll start up the week after that.
Okay.
So this one loaded on the put side, and we can see Wells Fargo on the put side had two different strikes. This one, 78%, not as huge, 1,300 versus 300 the previous day. But if you look at 1211, 70,000 versus 664. Now, I looked up these two. So I looked up the 1211 on the put side, and then I looked up the 1211 on the call side, and I assumed they looked like they both were the same strike. So either somebody was selling that many to do a short strangle or short straddle, because the call side was 22 calls, and then the put side were 21 puts. So I assume they're either buying them or selling them. And that's a question I wanted to kind of throw out there in a second. But all these other ones that we're looking on the call side, you know, all these other options here that I'm looking at, this November 20th, I just wrote it down, but you can look it up on the option chain. I'll actually show you on the option chain. So November 20th is what we're looking at. So if I duplicate this and I want to go into options and an option chain, I got to go back in time. Oh, there, it populated for me. So if I go to Wells Fargo, and then I go into 1120, and we all know 1120 was just, you know, 2 weeks after or 3 weeks after the election. You know, we can see some of these right here. This one right here, you're looking at 83,000 was the volume on that day versus the previous day, which was a lot less than that. We're talking about these 2450 calls, 21 cents. So 21 bucks to kind of take a gamble and see where all this money is coming from. But the other one, like I said, was a strangle or a straddle. So my question is, if I'm looking at this volume,
where is Wells Fargo today?
So Wells Fargo today, that's a good question. Where are they today? I mean, I made money on the trade, so that was okay in my opinion.
So it moved up.
It moved up. Yeah, it definitely moved up a little bit. I'll pull it up.
24.46.
And this was on 11/2. I did the trade on 11/3, so I did the trade the morning of the election. So this is at 3:14, I guess.
That's delayed.
But you can delayed. Yeah, this is sorry. But yeah, you can see. So here was November 3rd, was right there, 22 and change, and then now we're at 25. So
interesting. And what was the strike? It was 24.50.
I actually did 24.50s, and I added some 25s in there too. But it was November 20th, 24.50s. So you'd be up $1 now, you know, depending on where it is. And those options were going for 23 cents at that time.
Interesting.
So the question is when you see, and Josh might know this too, I haven't asked Josh this, but when I see this volume change, we don't really know based on the volume change if it's a buy or a sell, correct?
Yeah, that's what the open question. Does it act, should you get in, or is it going to act like resistance? And
well,
that's right.
We know it's a buy and a sell because there's two sides to each trade, right? But we don't know.
Right, it has.
Yeah, we don't know if it's the person, you know, is buying the calls or selling them, you know.
Right, if it's a net open position, yeah.
Yeah.
But what I'm saying is, have you concluded whether we as the investor should join the trade or not join the trade?
Right. Yeah. And I wanted to post that question out there because, like I said, I bought the 2450s for 23 cents. I sold them for 86, and I wanted a little longer term one, so I did some December 18 25s I bought them for 50 cents and I sold them for $1.06 and $1.15. But that's my question, was really like, okay, you know, I'm bound to get lucky every now and then. So was that just luck, or is there maybe some theory behind using, you know, a screener such as this tool and saying, okay, well, we see big movements in this particular area based on this particular event coming up, you know, is that a viable trade? And I don't know. And that's kind of why I was trying to pose it a little bit to the group.
Yeah, and maybe think of it more like a magnet, and depending upon your strategy, whether it's a good idea to get in or, you know, fade it or, you know, based on that. And,
right.
And I think there was a good comment like, okay, well, as it's when the high volumes are out there, day by day, is it like leaking away, or is it maintaining, or is it adding slightly? Is probably a good thing to know too.
Right. Yeah, because I was thinking somebody could own a lot of shares of Wells Fargo, and then they're just selling some calls to try to collect the premium and protect themselves, right? Doing like a cover call strategy. So I'm like, well, which way is it? And it's hard to figure it out. So I wanted to try to get everybody's input to see what they thought, you know. So because I think it's a great tool. I mean, I think there's a lot of good information there. And to your point too, using it as support and resistance might be kind of a key portion as well. So
I have to play with it.
yeah, I just wanted to open that up because, yeah, I mean, that, like I said, and then, I mean, that was kind of just the playoff of the election. I wasn't, you know, obviously nobody was sure what was going to happen. I mean, with obviously banking stocks, I mean, you have the Fed that kind of impact that price of that sector as well. But I just was like, well, for 23 cents, you know, I can buy a handful of these and not make a huge difference. And especially if I'm doing, you know, December options, then I have a lot of time on them really. So that's what I did. So, all right, cool. Well, I just wanted, yeah, if anybody has any ideas on that, play around with it, let me know. You know, I'm always looking for ways to kind of add that into not necessarily our studies, but add like a new screener like that into some back test so we can see if we can kind of find some relationship between the price movements in stocks versus what we have this data. You know, we have all this data. Finding the ways to use it to our benefit is one of the things we need to do. And sometimes, you know, I need help doing that. So if anybody can think of some good ways, let's kind of test it and see what we can find out. So, well, cool. Well, that's all I had really. I wanted to run through it fast. I didn't want to keep everybody too long past 3 o'clock. Sorry for the errors earlier with my phone. I'm on my phone now and I got the laptop up, but either which way we got it going. So, you know, like Josh had mentioned, I'm going to update some information on those webinars. I'm going to put in some of the descriptions in there for the webinar so you guys can go in there and check those out at your leisure, those resources tabs that we have on our website. But other than that, does anybody have any questions, comments, or anything like that before we depart?
This is Dave, and I wondered, you're asking about me a minute ago, or maybe 10 minutes ago. I think we were talking about NVIDIA, and I just wanted to, if you were asking about why, I think Gene was wondering why implied volatility was going down like today. If you look at, I was looking at NVIDIA when you were talking about that. There's some pretty big moves within the last, like an 80-point move or so within the last week and a half. And today's, I think it's about a 65-point move. So it's already recovered to about the middle of those big candles that were to the downside. So that's why implied volatility is high, but it's less than it just was. And if you look at that particular stock, there was also a big over 100-point spike after earnings, a week or so after earnings last time, because there was an announcement that they were buying ARM. So that was a different kind of piece of news, and that came out after the earnings report. So it's right in between that move too. So you might think maybe that's a good reason to do the earnings fly, because it's kind of like right in the middle of where support and resistance has been. But I'm going to stay away just because I think it moved quite a bit before the last earnings, and even though the earnings was on anticipation, I think. So I wouldn't be surprised if there's a huge move on NVIDIA that might be surprising, even though it's kind of like right in the middle of support and resistance where it's been recently. Just saying.
Yeah,
Yeah,
I'm going to get
that
up after this call.
We're trying it. Good luck with it. I appreciate it. Good luck with it. We'll see. I'm going to avoid though.
And that was my question. Yeah, I was going to ask you your thoughts on NVIDIA because you were saying last time, that you like that particular sector. So, and it seems interesting. There are a lot of points people saying that they could have a surprise blowout earnings and you could get this big rally, but then obviously you have the opposite side as well, and that's what makes the market. So, yeah, you can see the earnings. I have the earnings here, and like you said, Dave, 2 trading weeks afterwards, you had this big spike up, all the way from, what are we looking at, 490, to roughly almost 590. So 100 points, like you said, within that short time frame.
So yeah, I'd be worried about the downside if I was worried about anything. I'd be worried about the downside. So maybe just do the half fly. I don't know.
Right. Adjust it a little bit. That's right. So good.
Good luck.
Good. Well, thanks, Dave. I appreciate it. Yeah. Thanks everybody again for the input on the call, and thanks for joining. I appreciate to hear everybody talking and giving their input. So, Josh, I don't know if you have anything else.
No, thanks again for tuning in. I'll send the email tomorrow with the replay. And I'll keep all those earnings files till tomorrow. So, when I send out that email, that's when I'll go through and delete those files out of the shared drive. But I also put in Sudhir's earnings file, that Excel, into the Google shared drive, so you guys can pull that down and look at it. But other than that, thanks for tuning in, and don't hesitate to reach out to me or Shawn. No meeting next week. So everyone have a great holiday, Thanksgiving.
Thanks, guys.
Thank you. You too.
Thank you. Happy Thanksgiving.
Yeah.
Good
Thanks, everybody.
Thanks, guys.